to another episode of Prescription for Life. My name is Linda Golik. I'm the health and wellbeing consultant at Emplify Health by Bellin. And I am so pleased to be joined today by one of our partners from across the state, joined today by Jeremy Yardley. Jeremy is the president and CEO over at the Gundersen Health Credit Union, our partners on the other side of the state. So welcome, Jeremy.
Thank you. Thank you for having me.
Absolutely. So I wanted to bring Jeremy on today because we are going to talk a little bit about financial well-being. And as many of you have heard on this podcast before, we have all the different dimensions of well-being and what makes us up as human beings. And finances are one of those. So Jeremy, just to get started, just so our audience can learn a little bit about you, tell us a little bit about what you do, and then how is it that you got into this line of work? What was interesting to you about finances?
So I have been CEO at the Gundersen Credit Union here for 6.5 years. I've been in credit unions for 28 years now. Started out in the call center, worked my way up through numerous different departments, worked for the trade association in the state for a while, and just kind of saw all the different realms of the credit union. And so I like to think I've got a very well-rounded knowledge of all the different sides of the operations and how it works. And I think what really got me into credit unions was I was between my undergrad and my MBA program, and I got a job at a credit union. At that point, I thought you had to work for someone to belong to a credit union. I really didn't know what they were, but I just knew my undergrad was in finance. I really wanted to do something where I felt like I was helping people. So in that job, we were actually tied to the Navy, and we worked with a lot of the new recruits in the Navy and helping them learn how to balance a checkbook, how to, set up direct deposit, how overdraft fees, and just really, it started to hit me that, wow, and people really don't know much about finance. I was fortunate. I grew up with a mother who's a CPA, so it was ingrained in our head from I think kindergarten when we brought in our piggy banks. 75% of that has to go into a savings account. The other 25 you can take for candy and toys. Yeah. And through that, you learn that in the credit union, we're not for profit. We're here to help the people. We're owned and supported by the members. So our goal wasn't to just sell everything we could. It was, what can we do to help the members? And I really embrace that philosophy, and I feel that's kind of set the direction for my career as I move forward.
That's awesome. That's awesome to hear. So then, from your perspective, like, why is financial well-being important? Like, what do people gain when they start to pay a little bit more attention to their finances?
Well, financial well-being is something, our finances impact everything we do in our life. Um, we stress is just something people deal with every day in their careers, in their personal lives, in everything, and finances are a really big factor in that stress. We see people who at some point they decide, I've got to either pay my water bill or my heat bill this month. And it's a hard decision to make. And then if you've got children, you throw that equation in there. You want to make sure your children are clothed, make sure they're fed. And at times, if you're trying to decide which bill or which product do I purchase, that just makes it challenging. And from just a physical health side, we know the stress has very negative impacts on a person. And really, financial well-being doesn't mean you're rich. It means you can manage the funds you have and use those appropriately, while hopefully at the same time setting some aside for a rainy day. Unfortunately, bad things happen to people. You blow out a tire, all of a sudden your car needs $1,000 repair. You know, who knows? You could have, a tree falls in your backyard and knocks the fence down. These are
Right.
all things that you don't just plan for in your monthly budget. So by being able to know that I'm paying out X and I'm bringing in Y and they balance each other, it eliminates a lot of that stress. And you just, you know what you're going to pay, and you've got some set aside for those unexpected events, but you eliminate a lot of stress by not laying up at night worrying, oh boy, are they going to turn my heat off? Are they going to shut my water off? And it just makes you able to focus on other parts.
Yeah, absolutely. So I think, people are often under the mindset of, oh, well, I just need to make more money and then it'll all be okay. And that
Right.
doesn't, because the more we make, the more we spend, right?
Exactly.
So one of the things I wanted to talk about today was just, the importance of budgeting. And some people get exposed to budgeting, some people don't. Some people do it, some people don't. Some people have learned about it, some haven't. Your thoughts on budgeting and where can somebody start to really help themselves?
I think way too many people forego budgeting. Uh, Personally, I think that started with online banking because people don't balance their checkbook anymore.
Mhm.
Back in the day, you had that ledger in your check and you tracked how much you spent, you marked up when the check's
Yes.
cleared. Now people just log on online. I want to buy something that costs $50. They look, oh, I got $100. Perfect. They're not really keeping track of their expenses. For me, I have a spreadsheet and it lists every bill I paid and I put in every month the day I paid it and the amount I paid. So it allows me to keep track of, I know I've got this much expenses going out. And what people often miss are the small things. How much do you pay in gas? What are your insurance expense? Maybe if it's 1,200 bucks a year, really you should be budgeting $100 a month for that and setting that aside. So whenever January or October or whatever that month is hits, you're not going, uh-oh, I got to pay $1,200 that I don't have. And budgeting just allows you to get a full picture. And I really encourage, we meet with members here and we talk about budgeting. I really encourage them to really go through and keep track of everything you spend, from your entertainment to your food to your gas to, if you go out for dinner, what did you spend on that? If you go to the grocery store, what do you spend on that? And really get a sense of what's going out. The other thing people sometimes miss is if they make $50,000 a year and they're using their budget off that $50,000. Well, in reality, you're paying taxes on that $50,000. You're probably paying health insurance out of that $50,000. You're paying, hopefully, you're contributing to your 401k at work.
Mhm.
So that $50,000 isn't really $50,000. It might be down to $30,000 or even less, depending on those withdrawals you have coming out. So you really need to take a true look at what's your take home. How much do you actually bring home per paycheck per month? And then use that to set your budget and be realistic about it. If you know you're spending 200 bucks in gas, don't convince yourself, well, I can probably get by $100. You haven't done it. You may have to make some adjustments if you come out and you're making $3,000 a month, but you're spending four, you're going to have to make some adjustments, but it allows you to actually see it in front of you. Too many people, they get paid, they spend their money, and then all of a sudden, as a new payroll's coming up, they're like, uh-oh, I don't have anything left. So they unfortunately start putting things on credit cards or doing courtesy pay where they take the funds out of their account when they don't have the money, and it just puts them behind the eight ball.
Yeah. Yeah, just so much great information that you shared there. So then let's talk a little bit about debt because we know that people are in some debt, but there is a
Mhm.
difference between what may be considered more of good debt versus bad debt. So help us understand that.
All right. So the first thing I like to cover with debt is credit cards. We live in a world today where it is almost impossible not to have a credit card. Between online purchasing and Amazon to, I mean, there's a lot of places that don't even take cash anymore. You have to
Right,
have a card.
right.
So you can use a debit card, but a lot of times they're placing funds on hold. So a credit card is almost a necessity in today's world. But I recommend people first and foremost strongly shop those interest rates. You know, And I strongly recommend check your local credit union. I'm in Gundersen Credit Union here. We run our credit card is fixed at 8.9%, which is really good interest rate. In the Green Bay area, there's credit unions out there that have rates very similar to that. But you get all these things in the mail where they're promising you a $20,000, $30,000 line. And all of a sudden you look at it and it's 29, 30%. That's a third of your payment is going towards interest, not lowering what you owe. So really take a look at that and control your spending. If possible, pay that balance off every month. You've got a grace period, and if you pay it off within that grace period, you won't pay any interest on that. So you got to manage that. You've got to watch it, be careful with it. And just because someone offers you a $30,000 line doesn't mean you need to take it. What would you do if all of a sudden you're an extra $30,000 in debt?
Mhm.
Some other good debt is a mortgage. Most people want to have a home. They need a mortgage. We'll shop that appropriately, watch the rates. Where people get in trouble, you see this both with some mortgage places as well as car dealerships where they want to go in and they're like, I want a $200,000 mortgage. I want to look for a $200,000 home. Well, the mortgage person they meet with says, we've approved you up to $500,000.
Mhm.
People get excited. I understand that. But if you start really doing the numbers, what's your payment on that? Just on your principal and interest? What are your real estate taxes? What's insurance going to cost? That $500,000 mortgage is going to cost you probably more than $5,000 a month. Can you really, really afford that? Just because the mortgage guy said you can, doesn't mean you can. They don't know all of the things you're paying that you put together in that budget we discussed. So know how much you want to borrow, what you can afford, what you truly can afford, um, both when you're car shopping, vehicle shopping, or looking for a home. And you know, just be smart about it. Be prepared before you go in there. And again, I really recommend there's websites out there where you can do payment calculations. A lot of local credit unions will have calculators on their website, and it'll tell you. You can say, I want a $400 payment. How much can I borrow? You put in the interest rate, and it'll tell you. So
Mhm.
that way, you know in your mind how much you're going to spend before you go and start shopping. And these people will tell you, oh no, you can afford this. We're just going to add an extra year or two on the back end of the loan. We're just going to make it longer.
I even had a friend recently that had gone car shopping and, they were really pressuring her to buy a car. Um, and she said, this is my parameter. I don't want my payment to be more than this. I don't want it to be longer than a 4-year loan. And you know what? They wanted to sell her that car bad enough that they did that loan within her parameters. So I think it's a reminder too to people to maybe negotiate where you can. I mean, it
Yep.
doesn't hurt to ask the question to get yourself a little bit of a better deal.
Yeah. And there's so many resources out there online that where you can look up a value of a vehicle and you'll know, okay, I want to buy a 2022 Ford Explorer. And you can look it up, you can price it out, and you're like, okay, these cost this much. So say it costs $30,000 and you go into the dealership and they've got it for 39. It's like, well, I know online this vehicle's worth $30,000.
Mm,
You know,
mhm,
ultimately
mhm.
it falls on the dealership if they're going to give you that or not, but there's more than one dealership out there. There's more than one vehicle.
Yeah, yeah, yeah. Great advice. Great advice. So let's talk a little bit about saving. What rings in my head is I feel like I used to see Susie Orman, on different shows and, Oprah and things like that. And she was all about that emergency fund, all about having some savings. So, Jeremy, like, what do you recommend? Like, how do people start? Like you said, often, they're spending, to the end of things. How do people really prioritize that savings to be ready for those rainy days?
So I think one of the most important things is, well, first I'll say 401k. If your employer offers 401k and a match,
Mm,
max out that match as much as you can because that is literally free money. If they're
mhm,
matching up to 4%, and you put 4% and you're getting 100% return on your money automatically without having to do anything. And obviously, that's not going to help you in a rainy day, but when you get to retirement, that'll help you. For the day to day and the rainy day, I strongly recommend take out the money, have it auto withdrawn, auto deducted out of your paycheck before it hits your pocket.
Hmm.
You can set up a separate savings account at wherever your direct deposit goes into with your checking account. So if you have to start small, that's fine. $5, $10, $25. And then at the end of the year, when you get your review, if you get a raise, increase that amount a little bit. And you'll just see it start building up. And two recommendations on the savings account. A, if this is really your rainy fund account, set it up where you can't easily access it. Put it in, you can put it into a special savings account that can't be accessed with a debit card. It's not something where you can be out and having a good time and like, oh, you know what, I got $500 there, but let me pull a couple $100 out of there. I'll put it back later, which is great, but most of us don't. So
Hmm.
make it a little hard to get. Just
Hmm.
you can still access it, but on the spur of the moment, you can't just pull those funds. And B, look at your interest rates. You know, I don't think a lot of people truly understand what a money market account is. They think it's tied to the stock market. They think it's, volatile. Most money market accountants at a financial institution are just an account that pay a higher interest rate. And depending on the institution, they may require a minimum of a couple $1,000 or $5,000 or 1,000. So shop that around as well. At Gundersen Credit Union here, we offer anything over $1 in there, we'll pay, I think it's 1.75% versus 0.1% that you see on a lot of savings accounts in town. So that interest, that's income for you. And that starts building up that balance as well. So shop those interest rates, make sure you're getting the best return you can get on your money, and make sure it's something you can't just easily access. It's there for a rainy day, not just as part of your daily funds.
Yeah, great advice. I always remember the phrase. I had an aunt that was a financial planner, and she told me very young in my working career, she said, pay yourself first.
Yep.
Pay yourself first. And that has always stuck with me. And her too. She said, if it's small, that's okay. Just that you get into the habit of your saving, you're putting aside for those emergencies. So I thought that was great. Jeremy, where can people like learn more? What are resources you recommend, or what are tools that people can use that you have found to be really helpful for people in terms of managing their finances?
Well, like I said earlier, first I would recommend if you belong to a credit union, look at what resources they have on their website. A lot of them have payment calculators. They'll have links for, determining values of your vehicles, which not only on the purchase side helps you, but on the trade-in or if you're going to sell it to make sure you're getting a fair price. Um, America's Credit Unions has got a consumer page where it'll tell you what credit unions you're in your area. It has budgeting tools. It has just small, short articles and white papers on some of the financial news that's out there. And then if you do get in over your head, um, there's attorneys with billboards everywhere saying, file bankruptcy, we can get you out of this. I've seen people pay $5,000 for bankruptcy to write off $3,000 in debt.
Mm,
Doesn't make sense. So there are nonprofit financial counseling organizations out there that can really help you and get you pointed in the right direction, and they're not going to make money off you. Um,
yeah.
I can't speak for all of them. Some may charge a small fee on those, but shop those around. Make sure you're in the appropriate, working with the appropriate organization if that's something you need, and don't be ashamed to go in that. Um, I think at some point in all of our lives, we all got overextended, and there may be people listening right now that are overextended going, I don't know what to do. Um, so the resources are out there. There's a lot of good information. Unfortunately, there's a lot of bad information. So, um, Usually, if it's a nonprofit or a government program, those are usually more in your favor than a private organization.
Good. Good information. So helpful. Well,
Hmm.
Jeremy, this has just been a great conversation. I really appreciate your time. Was there anything else that you wanted to share with our audience? Was there anything that we didn't get to that you wanted people to know today?
I think I would just restate that this is a long process, especially if you are overextended on your lending or your debt a little bit. It's not going to all of a sudden go away. It's a process. It takes a while. Slowly start paying that debt down. Know exactly what you're spending, what you're bringing in, and slowly tick away at that while also still building your savings account. And you may not be able to go out to eat 3 nights a week. You may have to cut back on that. Maybe when you're eating at home, you're having chicken instead of steak, or unfortunately, sometimes you need to cut back, but just know it's a long game. And when you get there, um, if I see people that have 2 or 3 or 4 credit cards that are maxed out, we'll look at them, and typically you want to pay more on the highest interest rate ones first, pay those down. But sometimes I'll see someone, they've got a smaller balance. They only owe $1,000 on a credit card. It's like, okay, let's pay that one off. Let's have an achievement. We paid a card off, pay it off and closed it down. Now let's start working on the other stuff. The other piece of advice I would get to everyone is, in our world now, we're all very conscious on credit scores and credit reports. We know that's what's used to determine if we get loans and what interest rates we will pay. There's this site out there, it's called annualcreditreport.com. You can, up to once a year, request a free copy of all 3 of your credit bureaus. I recommend everyone do that. It gives you an idea to see. Now, it's not going to give you a credit score when you do that, but it will give you the opportunity to review it and make sure the debt on there is yours. Um, Unfortunately, identity fraud is out there. People have access to information on the dark web. It's crazy. If you actually sit through any seminars and they talk about that, it's scary. Don't sit through one. But look at, just make sure everything on the credit bureau is correct. And then you can dispute it through that website if something's not correct. And if you don't understand what it says, bring it into your credit union. We all the time here, we work with people, they'll pull that, they bring it in, and we go through line by line with them to make sure it's what they have and to make sure the information is correct.
Yeah. Awesome. Yeah, great additional information. Yes, because yeah, fraud is real. And it's good to get that cleared up as soon as possible. Well, Jeremy, thank you so much for being with us today. Just really appreciate your time and information. Thanks to our audience for joining us today. Hopefully, you picked up some tips and are feeling inspired to work a little bit on your financial well being. Please like, subscribe, share this podcast, and we'll see you next time.
Thank you for having me.
You bet.